the economy is losing momentum. The job market is throttling back. Well, I think we'll get a gain in employment, but it'll be small. A couple 300,000 jobs, which in any other time wouldn't be bad. That would be pretty good. But given that we're still down about 10 million jobs from the pre-pandemic peak, that's pretty disconcerting. And given the way the pandemic is going, and given the fact that we're not going to get any help from Washington, at least not over the next few weeks, I suspect we could see some job losses in December and into January.
Mark, how are you incorporating that into your forecast, just in terms of the recent vaccine news that we've gotten, and also balancing that with the rise in COVID cases, the fact that we still don't have a stimulus deal? Have you adjusted your U.S. growth forecast at all?
Yeah, it's a bit schizophrenic. I expect the economy to struggle more in the near term. I think early 2021 will be, well, between now and let's say February, March, I think it's going to be pretty uncomfortable. I mentioned the loss of jobs. It just feels like the economy is going to struggle here. But, we've got some really good news on the vaccine front. If, in fact, everything kind of sticks to script there, hopefully by the spring. And on top of that, feels like we're getting better news out of Washington. We should get a package, if not in December, maybe January, February. So by spring, I think we'll be kicking back into gear. So the very near term, very uncomfortable, but hopefully get on the other side of it and things turn out much better as I would expect.
Then there's that song from 100 years ago, Ain't We Got Fun? The rich get rich and the poor get children, because there's nearly $1.4 trillion that have been saved, as you point out, as of October. But the people who've been able to save that money, that's the upper what percent of this economy? And what's going to happen when that money comes in? Is it going to help the people who might be in the bottom 50%?
Yeah, good point. Obviously there's big winners in this pandemic economy and some really very serious, significant losers. The winners have been able to save. They work from anywhere, work from home. They have stocks. They own their own homes. Have enjoyed everything we've been seeing on Wall Street. But then we have a large number of Americans, tens of millions of Americans who are unemployed, underemployed, have suffered pay cuts, have lost their jobs permanently. They face rental eviction if we don't get an extension of that moratorium. A lot of debt payments that are coming due. So it's going to be a significant struggle for them. Hopefully, once we do get on the other side of the pandemic, we don't forget that we're still got all these millions of Americans that are struggling and will need help. And I think that does require that lawmakers, Congress, and the next president provide additional help to try to get those folks back up and running, to get back to full employment as fast as possible.
Hey, Mark, what do you make of the Treasury's decision? We heard Secretary Mnuchin, he came under criticism, faced some criticism, I should say, during a Senate hearing this week for his decision to wind down some of those Fed credit facilities. What did you think of that? And what kind of risk could this potentially pose here to the market and to investors going forward?
Yeah, I totally perplexed. I didn't get it. I just don't understand what he's thinking. The credit facilities were slam dunk successes. They were so successful that the Fed didn't really need to enter into the market and buy many securities. Just the fact that the Fed told investors that they had their back was enough to convince investors that life was going to be okay and they would continue to provide credit, and interest rates remained low, and it was just a slam dunk success. It was kind of sort of the image I have in my mind. It's like a firewall between the chaos in the economy and the financial system. Very, very big difference between what happened in the financial crisis when we didn't have those credit facilities, at least not early on, and the problems in the economy undermined the financial system and, of course, exacerbated that recession. And even worse, made the subsequent recovery that much weaker. So just a slam dunk success, not at all costly. There's no downside to keeping them in place. So why? If everything kind of sticks to script and I'm right, and we get the economy comes back after we get those vaccines, then no big deal, no harm, no foul. But if things don't stick to script and things are challenged and we get back into a risk-off environment, it's going to be a scramble. I think the next Congress administration will appropriate more money and will resurrect those facilities, but why go through all this? So totally confused by the whole thing. I just don't get it.